The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.
The opinions voiced on this show are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a decision. As always, all performance reference is historical and is no guarantee of future results. All indices are unmanaged and may not be invested into directly. Hello and welcome to Financially Speaking. I'm your host, Tony Zambri, Managing Director, Financial Advisor with Zambri Financial, powered by LPL in Melville, New York. You can catch the show live every Wednesday evening at 5 right here on 103.9 LI News Radio. And if you happen to be out of the listening range, you can always go to the station's website, www.linewsradio.com. Click on the Listen Live link, or you can download the station's app and you can listen to us on the app. And of course, I would be remiss if I did not remind you that if you want to contact me for any reason, please go to our website, zambrifinancial.lpl.com, ZAMBRI financial.lpl.com. Once again, folks, welcome. I appreciate you being with me here today. Hopefully you are not stuck in traffic. It is a chilly one on the island. We are back below freezing, and looks like we're going to have a little bit of a mess tomorrow morning on the commute, which is always a beautiful thing. As I head into Melville from my home off exit 66 on the Long Island Expressway, can't wait to be in the snow tomorrow morning. But it shouldn't last long. It's supposed to go over to rain around 11, 12 o'clock, and it'll end up warming up after that. So. We do what we got to do. That's what happens in the Northeast. Today, good day for markets. Dow closed up 317 points, 44,873. Dow is up 0.7% today. S&P closed up 23 points, 6061, up almost 0.4%. NASDAQ closed up 38 points, 19,692. Up just about 0.2%, and the aggregate bond index closed up just over 0.5%. From last Wednesday to this Wednesday, this is remarkable. Not so much in that the performance was great from Wednesday to Wednesday, but how amazingly consistent it was. The Dow was up 0.3%. The S&P, well, let's even take it down to the 100th. The Dow was up 0.36%. The S&P was up 0.36%. NASDAQ was up 0.31%. And the aggregate bond index up 0.42%. So remarkable. The three stock indices were virtually identical, and even the bond index had a decent Wednesday to Wednesday, up 0.4. Year to date, it's been a good year. As we head into our first trading week in February, Dow is up 5.6% year to date. S&P up 3.1%. NASDAQ up 2%. And the bond index up 0.9%. What I also found interesting, kind of in looking over these numbers, I was looking at numbers through last Friday, so basically through January. The sector that did the worst last year, healthcare, is doing the best so far this year, and information technology was doing the worst. And this really is, I guess, kind of to be expected, right? It goes towards the cyclicality of things in life and in markets. And it's why we don't want to have all of our eggs in one basket. We don't want to have everything in IT. We don't want to have everything in healthcare. We don't want to have everything in utilities, right? Because then we've got to be just right as to when we get in and out. But if we own all of these things and we have a diversified portfolio, then chances are we're going to be okay if we're just patient, and it kind of smooths out the ups and downs a little bit. Was reading a number of things that I thought would be good to share with the listening audience today. And I was reading this in Bloomberg today. About 350 of the 500 stocks in the S&P were higher. So about 70% of the stocks in the S&P were higher. And yet the S&P was only up 23 points, right? Just about 0.4%. Why? So why, when we had such breadth of positive returns from 70% of the stocks in the S&P, why was the S&P not up more? Well, the Magnificent Seven, right, was down 1.5% today, led by or pulled lower by Alphabet, the parent company of Google, which was down just over 7%. So I know I've spoken about this before, and sometimes it really feels like I'm just probably boring you to tears, but I want you to understand how the S&P works. The S&P is driven by the largest companies within that index. It is a cap-weighted index. So over the last 2 years, the Magnificent Seven has accounted for more than 50% of the S&P's gains. Again, according to Bloomberg, right? So 7 out of 500 companies have accounted for more than 50% of the gains in the S&P over the last 2 years. And today, despite, 70% of the companies being up, the index was only up 0.4% because the Magnificent Seven was down 1.5%, and Alphabet in particular was down 7%. Building on this theme a little bit, Ed Yardeni, who is the head of Yardeni Research, said today that he likes the S&P 493. So the other 493 companies outside of the S&P to outperform. Now, in fairness, he did say that he doesn't believe that the Magnificent Seven are grossly overvalued. Left to be determined there as whether he thought they were significantly overvalued. But point being, he likes what a lot of other market strategists have been talking about, which is a broadening, quote unquote, of the market. And when you hear broadening of the market, what they mean is that they're expecting the majority of the stocks within the market to do well, in this case, to do well, but to do one thing or another rather than the positions that are concentrated in the top 7 companies within the market. Today, also, the 10-year Treasury yield ended at 4.42%. That is the lowest it has been in 2025. Now, I think it's important that we talk a little bit about, bond yields. We have had an interesting, successful beginning of the year, certainly for stocks, but an interesting period in stocks, right? Even if we just look at this week, we saw markets down rather significantly Monday morning based on fears of tariffs. And then when President Trump extended the tariffs or delayed the tariffs on Canada and Mexico 1 month, stocks recovered most of their losses, but not all of them. And then yesterday and today had some good days. The bond market, very interestingly and perhaps tellingly, did not react the same way that stocks did. So when I say that the bond market didn't react, it didn't sell off and see yields go spiking up because the bond market is apparently not worried that tariffs are going to become inflationary. This, conveniently for me, mirrors what I've been saying on the show and in conversations with my clients, and that I too do not believe that tariffs, if they occur, and I know we already had a 10% tariff that did go into effect on China, but tariffs on Canada and Mexico, if they occur, I do not believe will necessarily lead to inflation, and the bond market appears to agree. Because if they didn't, the bond market would be selling off with fears that the Fed's going to raise rates, and the Fed raising rates would drop bond prices, ultimately probably would also have negative impacts on stock prices. But the bond market is not thinking that. A couple other things that I'd like to go over. According to Bespoke Investment Group, and we're early in the reporting season, fourth quarter reporting season, but so far 75% of the companies that have reported fourth quarter earnings have beat analyst expectations for earnings per share. 66% have also beaten revenue estimates. And these are both really strong numbers from an historical perspective. So, expectations were pretty good for earnings, and companies are coming in and beating them. And that bodes well. It bodes well for the market. It bodes well for the economy. Again, there are things that can happen and very well may to change this. But certainly those are some pretty good things. When we come back from the break, as I hear the music playing, we'll pick up on that theme a little bit. Once again, folks, you have been listening to Financially Speaking. I'm your host, Tony Zambri, Managing Director, Financial Advisor with Zambri Financial, powered by LPL in Melville. Please go to my website. Any questions, comments, concerns, want to contact me for any reason, it's zambrifinancial.lpl.com, ZAMBRI financial.lpl.com.